All right, guys, I am excited for our guest this afternoon. We'll talk a little bit of crypto for everyone today. She's one of the most knowledgeable industry commentators around, a crypto educator. She's the host of the Coin Stories podcast. She's a frequent Fox Business contributor as well. Natalie Brunell is on the show. We're so happy to have you, Natalie. Thanks for doing this.
Oh, thanks so much for having me.
It's such a busy time, so much to dig into here as far as crypto is concerned. I want to touch on a few different angles here specifically. Even this morning, I mean, BlackRock coming out, filing for the possibility of a Bitcoin ETF. We'll get to that. Let's talk about Binance and Coinbase. Obviously, the biggest stories over the past couple of weeks here, the SEC lawsuits coming through. We get some layoffs when it comes to Binance announced earlier today. Give us your thoughts here. How does this play out in the end for both?
Yeah, I think we're going to have to wait and see, and that process might actually take years as, these lawsuits have a tendency of dragging out. But, what's interesting is, first of all, we are getting a little bit of clarity. I know that's something that we really want in the space, and that is Bitcoin is not in any of these lawsuits, and it's really not under the microscope when it comes to the regulatory pressures that some of the companies are facing. So investors, whether they be retail or institutions, they should feel a little bit safer with the idea that Bitcoin is not going to face some of these regulatory hurdles that the other tokens will. The lawsuits aren't that surprising. The 1-2 punch of them coming both at the same time, maybe that was a little bit surprising, but some of the claims made inside of them, especially the Binance lawsuit, really egregious. It seems to be some nefarious activities that were going on. And I think that, a lot of people are just wondering, what is a crypto security? And if there are a lot of crypto securities, which I would venture to say there are tens of thousands of them that are posing as, commodities when really they should be registered like companies are. I think that those will have to shake out, and a lot of them will end up not existing in the space anymore. I think that the regulators are really trying to make that clear, that if you are operating a company that's issuing a token and it falls, it passes the Howey test, then you need to register. You need to come into compliance so that investors really understand what they're buying into. There's a lot of opaqueness in this space, and hopefully with these lawsuits, people do sort of start to understand that, Bitcoin is one thing, it's different, and a lot of the other items that exist in the space, the instruments that exist, are actually securities that have not taken the proper, due diligence in order to register and in order to disclose everything that they should disclose to investors.
Focus and approach this from an investor standpoint as well here. When it comes to Binance specifically, they seem to be the one that, was at least willing to play by the rules and even approach the SEC a few occasions to say, hey, what do we do here? Can we get some clarity? But now they're being almost made an example of, and you mentioned a few reasons why. Where do investors turn when it comes to an exchange at this point, in your opinion?
Well, I obviously, I've chosen to focus on Bitcoin because it is the only token and blockchain that exists that fulfills the properties that make good money. When it comes to investing, I think that there's so much risk out there, and you really have to take the time to understand the companies and the boards and the products that are being created and the supposed innovations. And the space is really new, and it feels a little bit like the Wild Wild West, not unlike the internet of the early 90s. And so I think that investors really do need to take the time to study what they're investing in. I've taken that time with Bitcoin, and I realized that, again, it does fulfill the properties that make perfect, sound, hard money in a digital way. And so I choose to put my money there as opposed to trade it, or what I consider gamble with the other tokens and currencies out there that are going to face, regulatory pressures and potentially lawsuits that could, cause them to no longer exist in a couple of years. So I think that, one of the things that investors are looking at is something that they don't have to worry about, that they can purchase and know that 5-10 years from now, it's going to be an investment that they can rely on that will maintain the purchasing power of their money. And that's how I see Bitcoin. It's something that I don't trade. It's not something that I sell. I'm not trying to time the market. I'm trying to spend time in the market so that in the future, I can protect everything that I work so hard for and make sure that I can still, have that purchasing power years from now, which you really can't have with the dollar. And when you're investing in cryptocurrencies, a lot of it feels like you're going to a casino.
It's a great point. I'm glad you made it in the sense that, the days, I think, of maybe in and out and in and out and in and out are behind us when it comes to Bitcoin specifically. And a lot of people should maybe be approaching it from a longer term perspective at this point. I want to give you a shout out in your podcast, specifically a shout out. You've had excellent conversations on your podcast, from Michael Saylor from MicroStrategy right through to regulators themselves. When it comes to how this plays out, and I'm speaking of regulations in the US specifically, how do you see this ending from the SEC, from regulators across the board?
Well, right now, I think it's a bit of a standstill, right? Because you sort of alluded to it before. The companies are saying, we've been trying to get clarity. We've been trying to work with the SEC. And the SEC has been saying, well, we have a framework in place. It's the Howey test. And if you pass the Howey test, you have to register. You have to come into compliance and let investors know everything they need to know about the company and how it's operated. And so we're sort of in this place where I think this is going to drag out for several years, because the companies say they shouldn't fall under, let's say, this 1930s securities law, because they're saying the technology is different. The law was made when this technology didn't exist. The protocols, do they really fall under these different prongs of the Howey test? Meanwhile, the regulators are saying, the rules are pretty clear. The rules of the road are there, and you either follow them or you don't. What's really sad is so many people have, invested money that they've lost. I think that the hand of the regulators was certainly strengthened after FTX and the fallout, and there are nefarious activities that are going on in this space. If you read the Binance lawsuit, I mean, it's pretty egregious that some of the executives were basically saying, we are operating an effing unregistered securities platform, right? And saying things that maybe they shouldn't be saying if they are trying to work with regulators. For me, Bitcoin has been a safe haven asset, because I see it as something that, once again, regulators, policymakers have already recognized is a digital commodity. It's truly decentralized. I don't have to worry about some of these things and venturing to guess which company or which token is going to exist 5-10 years from now. And as I mentioned earlier, I think some of them won't. I think 5-10 years from now, we're going to have very few, maybe a basket where specifically these are cryptocurrencies that are securities. They've come into compliance. They've hired the lawyers and filed the right paperwork. And these are digital commodities that are more decentralized, Bitcoin being the king of that. So I think the space will look very different. I think that regulators are trying to get as much under their control as possible. They certainly don't want privately issued stable coins. They don't want things that are out of their grasp. And we'll see how that plays out. Because obviously, in question at the heart of this too is what's going to happen with the US dollar. Policymakers probably feel a little bit like the US dollar might be under threat, especially by stable coins or things that want to take its place. I don't see Bitcoin as taking the place of the dollar anytime soon. I really do see it as that savior to inflation, so that you can plan for your future and save. So many people are dealing with not only inflation of the CPI kind, which has come down, but look at asset inflation over the last decade. Look how much homes have gone up. Look how much the cost of living, the cost of education has gone up. And people feel frustrated and left behind. Their wages are not keeping up in real terms. And Bitcoin has been the best performing asset of the last 10 years. So I think, a couple of years from now, we're going to see Bitcoin in the 6 figures. I think it's going to strengthen. The adoption is going to grow globally. And I think we'll find out, which cryptocurrencies are securities, and hopefully we'll see some register, come into compliance, and people will feel a little bit more comfortable investing in the space in general.
A lot of points there when it comes to essentially why confidence in this area has been crushed over the past, months, and even going back a couple of years, if we want to talk about, the FTX debacle and everything else that has brought down the price of Bitcoin this year. You mentioned a few there, but give us the positive side here. If someone's sitting on the sideline right now saying, you know what, I think it's worth it. I think it's worth it to have something involved in this industry. I guess 2-part. A, where do you put it, to work? And B, when, in your case?
Yeah, obviously your show, a lot of it's about trading. And so there is that skill set. And I think that people, who are great traders can make a great living. But for the average person, I think dollar cost averaging into Bitcoin is just the safest and most stable and consistent pathway to saving for your future. Again, because of the points I made earlier. Right now, we are in a debt doom loop, and it's playing out in slow motion because we are the world's global reserve currency, but we have $200 trillion in unfunded liabilities. We will never be able to pay that back. We really need to restructure that debt. Politicians won't admit this. They just keep kicking the can down the road, and ultimately the Fed will have to print more money. That money is going to go somewhere. It's been, going to assets over the last several decades, which is why we've seen stocks go up in the way that they have, why we've seen real estate go up in a way that, young people, millennials, Gen Z can't afford a home that their parents could. And so you have to protect yourself from that, from inflation, from the inflation of the money supply. And so Bitcoin has, once again, it's outperformed every other asset. And it is the truly decentralized blockchain that is absolutely scarce and finite. You can't expand the supply past 21 million. So for me, I am putting my money where my mouth is, and I've put my money in Bitcoin, and I continue to dollar cost average just so I can get that nice cost basis, which is a lot cheaper now than it was when it was at the all-time high.
I know you are super busy and pressed for time. We appreciate you coming on this afternoon, guys. Check her out on Twitter, at Nat Brunell on Twitter. Coin Stories on YouTube and wherever you get your podcasts. Natalie Brunell, a pleasure. Thanks for doing this.
Thanks so much for having me.